All right, that's right. I just woke up. Uh, I have the amazing privilege of waking up a lot later than most of the world. I'm gonna take this time to have the market open. I'm gonna be back in the evening to see the market close, but I did want to sell this continuation of a put in high liquidity, and the best way to do that is to be around when the market opens or when it's about to close. Um, I do like having the $1. I like to have enough premium to cover a width. Um, that might be difficult for some people to imagine, but if you've spun the wheel enough times, you'll be aware that having the widths come to you is incredibly nice because if it runs up a width, you still have the width to spin the wheel with. Uh, Please don't freak out over my indicators. Um, but in the past, let's give it a year. Since I'm trading on like 45-day time frames, right? Um, I'm feeling strong about the 61 strike, right? And then I really like the 59, but if I'm only gonna get a width out of it, 62, you know what? We could give it a 62. I mean, I've got 45 days. I'm happy with owning it. It's SPY. Uh, of course, gonna let that. What is it doing here, man? Gotta let the shake roll out. Um, it opens here. All right. I'm gonna let it shake out. And what's going on? I'm gonna let it shake out. There we go. I'm gonna let the open shake out, and then I'll worry about placing the put. But there's usually a lot of volatility at the jump of the market like that, so we'll see. If it dips down, I might quickly move for the 61 or 62. But um, if you give it a year, 63 is here, and that was a very recent test resistance support. Who cares what you call it? It's a mental barrier. Something in the S&P is making it tough to cross this. You have to remember that the S&P is a composite, so it's not like an individual stock where people see the number 100 and they don't want to go below it if they're above it or above it if they're below it. But something inside the S&P is making it tough to get over 63. I think 62 will serve just fine as an aggressive uh, put sell um, because if the S&P drops, 20-30% down into this range, 62 is aggressive enough, more than aggressive enough. That first print is generally the one that takes the longest. I hope they're not moving in 10-minute intervals now. We can catch up on the real stuff with a more liquid ETF. There it goes. Wakes up a little bit. You can see just the first candle ticking. It looks like price action is trying to push it higher, which is fine by me. We will catch this 44-day. 62 with a delta of 57 is awfully aggressive. Wait. Alright. There we go. Should have known. The other side of the coin. The width of the strikes plus extra would be nice. So I'm going to go ahead and take this position, even though it's awfully aggressive. And a singular contract, an odd lot for your boy. Let's see if we can get an extra $5 premium out of it. I don't have forever to sit here and haggle with the market, but it would be nice, right? It'd be wonderful if I get an extra $5. Look, it's us. Right there. It's everyone watching. Waiting for the market to either snatch it up or leave it where it is. Oop. A good morning cough. Alright. I don't have all day. I got places to be. So, we'll give it to them how they want it. Whoa. There we go. It's a lot more appropriate. Insta-fill. Because, whoop. Done. Retirement. Alrighty. So, volatility to start the jump. Down $5 on the contract already, but that's the game you play. And my portfolio will correlate with SPY much more heavily than it did the second half of yesterday, where I took the lock-in of 45-ish% of the premium. I'll come back round 4, maybe shortly after. This video is sponsored by my book, 100 Every Shift. It helps bartenders and servers increase their income and make consistent money on every shift. Alright, get a good look. It's been a full day, and essentially the portfolio has given up everything that it has generated over the last few days, but no big deal. No big deal. I mean, this kind of thing happens when you open a portfolio and you get in and the market's volatile. You can see that it's jumping around after hours, but it is what it is. But a big red day, giving up more than everything that was made. It's actually dipping into deposit money, which is huge, right? So part of the money that has been made from the match on the rollover is getting touched into. The put that was sold basically doubled in value, which is, well, you know, it's not fun, but I'm not arguing. It's I'd be happy to buy at 62. No big deal. The money I'm still gently averaging in. Chill. Averaging in. The faster that the shares come to 100, the faster that it becomes easy to build the first machine off of SPLG
and there is no context for what I mean at that at the moment, but there will be. And it's a long way to go from $202 to 6,000 something at the moment, but it will help tremendously to average down for the returns of the portfolio to be what they are. This is probably the lowest return that I have had on the portfolio thus far because this is the largest down day. But I'm happy to see it as it is. And if there must be a sell off, I'm glad that it's happening now, early. And if I take assignment on the 62 and I have to sell calls on the 62 for months, 8 to say, let's say 3 to 9 months. If I have to sell calls on the 62 strike for 3 to 9 months, then I won't argue a bit. It will just be averaging in at a lower cost basis. Given that the cost basis I have currently is above the strike price, I wouldn't be too concerned. It's the S&P. Stocks always go up and they never go down, you know what I'm saying? So what's the harm? It's been a bloody day, but we'll see what tomorrow holds.